back, everybody. I'm here with Matt Cotter of BNC. Matt specializes in insurance here in New York City. I want to say in the construction world. That is really a big part of your client list.
Yep.
So, Matt, tell us a little bit about yourself, and then I'm going to tell everyone how I met you. But tell us a little bit about yourself and how long you've been in the industry and what you actually do.
Well, first off, thank you, Sisto,
You're welcome.
for inviting me in and talk about construction insurance. I'm with BNC Insurance and Risk Advisors. I'm in the construction unit within BNC. So really 95+% of the folks I work with are general contractors, subcontractors, a little bit of real estate, but for the most part, it's GCs and all the trades going on.
So you're right in the niche of what we do.
Right in the mix of it.
With us working with contractors every day, getting permits with the building department and the Department of Transportation and anything else related to the government, where insurances are required.
Yeah.
So quick story: we met through a networking group. Went to two different events, and we seemed to congregate every time together.
A couple of drinks afterwards.
And I found it incredibly informative to meet you when we would sit down and talk, because there's a lot of questions that general contractors ask us, and on the flip side, we ask them. And to be honest, until I met you, I never got the right answers. So today, this episode is a lot about some questions and answers. And you were incredibly cordial to send us a list of questions that you actually put together as part of a social media marketing type of thing. And we're going to go through some of those questions today. And I think that the power of people makes us join. And by meeting you, I can bring this to our viewers. To tell them a little bit about where the insurance is today. So the very first thing is, unfortunately, right now, when we talk about insurance, the first thing people do is they roll their eyes and they go, "Oh my God, it's so expensive! What a scam! This is crazy. The laws are changing." And unfortunately, the podcast before you was with Andrew Peters, who you know also from Curry and Brown. And he was, I'm either the hero or the villain because I do estimating, right? So, and then in my world, he's the expediter. Why do we got to pay for expediting, right? So we're all kind of, whether we admit it or not, we're really a lot in the same place, which is, oh my God, I got to spend money to file the plan. Oh, why do I got to buy so much insurance? Oh, why do I need a cost estimator? Well, there's a reason, right? So my show is a lot about, and our brand here at Design is a lot about protecting the workers, protecting the people that are outside the construction sites, protecting the people that after the job is done, that the building was built properly. And, so our brand is a lot about laws, for people to be safe, public welfare, and doing things by the rules. And so
right way.
I appreciate you coming in. Yeah. So my first question that I have always is, should you shop your insurance every single year? We all feel comfortable with our broker. But so tell us what goes into the renewal every year, and what goes into a general contractor getting their quote.
That's a great question, and a question that I get all the time, which is again why I put it as a top 10 frequently asked questions. And I think years ago that was the mentality for a lot of contractors. Like I need to shop it out every single year. I need to make sure that I have the best price that's out there. And the reality is, the quick answer to that question is no. No, don't do that. The perception that the insurance underwriters have to someone that shops it every single year, and they may not even be going to different brokers.
Or the same broker.
It might be the same broker that shops it out every single year, and what that does is, first of all, they're shopping it out to carriers that may not even be a viable market or a viable carrier for this
for
particular
your
risk.
type of business, right?
So, and even for the ones
it actually becomes counterproductive.
It's counterproductive. It's just wasting a lot of time. If you're positioned with the right carrier, you're usually there for a reason. You're usually either in a best of breed carrier,
sure,
because you take safety very seriously, and
you have a past history record, and you've proven that you're the right customer for them, and they're the right insurance company for you.
And on the flip side, if you're kind of over here, it's also for a reason. It's because there's been some claims, some activity, and a lot of it is stuff that you can't control. Some of it is.
Right. Now, do they separate that, the stuff that can be controlled versus non-controlled?
Definitely. I mean, and whenever we're submitting, either for a current client or a new prospect, where we're submitting, putting a submission together to the underwriters, they want to know what the story is.
Right.
So so there's two things that we look at. We look at the data, which is what they call loss runs, which is just a report of your claims.
Right.
Are those claims still open? Have they developed?
Are there more? Are there less?
Yeah.
Do we see a trend?
Right. And then the narrative part to that is what happened with these claims. And if you have a frequency of claims, that's typically more concerning
than the outcome.
Than one big one. So if you have, they call it severity or frequency. Severity is you have one big pop. It's a $2 million claim.
Right, but it was a one-off event.
Right.
Versus where you keep getting
bump, bump, bump. Then they see a pattern. They're saying,
there's the
what's
trend.
The pattern? What's the trend? Is it safety?
Right.
Is it what we're seeing more now is sometimes the safety is in place, but on the front end they're not doing a great job hiring.
Right.
So they're not vetting the people that they're bringing on, and those are the people that are getting hurt.
Right. So it's funny that you bring that up. So a lot of the customers that we have over time, and I'm going to bring this because it's one of the questions you asked. So years ago, we would work with a GC, and then 2 years later, he'd have a different name. And then 2 years later, he had a different name. Design 2147's been around. Next week will be our 37th year being in business. So, so I'm an old curmudgeon, been doing this a long time. And the trend back then was to change the name of, go do work as this, and then you go and you get a new, employee ID number, and you get and that was a way that they thought, or they could save some money. And I've heard rumblings, because I'm not in the insurance business, but that practice is kind of out, because if they know Sisto Martello, they know everything about him. They know his history. Yeah. So whether he's working for Design 2147 or he's working for Design 2148, I want you to tell our general contractors that changing the name of a company doesn't get you off the hook for your past performances, because it'll always be looked at.
For the most part, that's right, because there's a new thing out there called the internet.
Yeah.
Not that new anymore.
Right. But it's transparent.
Yeah, the underwriters, the first thing they do, I mean, a lot of times, they take the submission that we give them and the description of the contractor, but at the end of the day, they trust but verify.
Well,
they want to.
And why wouldn't they?
Yeah,
that's their job. That's what the underwriter's supposed to do.
This guy, you're saying he does only work in Long Island, but when I pull it up on the Department of Buildings, I see he's got 15 permits in New York City. So what are you talking here? So like all that stuff is, and certainly the ownership piece is.
Well, and then you're not starting off on the right foot with you putting it out to bid to the insurance companies, where you're saying you only work in Long Island, but in reality you're in Manhattan, or you're in Westchester, or you're in Connecticut. Yeah. So that's something that I always wanted to ask someone on the insurance side, that
starting it new is not only, I mean, it's very difficult to do,
and it's risky because you don't have a history.
Right. And the other piece is, a lot of times people will try and start a new company because there's been issues.
Right.
So in your personal life, when you got issues, you don't just walk away from it. you face the issues, right? You face the problems and you correct them, and that's
right. You're not going to get a new identity and new social security number. So
exactly.
So the point that I was trying to make is you can't run away from it.
No.
If you've had claims, whether they were under ABC Corporation or Design 2147, they will follow you. And if they're rectified and you have a good track record, regardless of which company you have, that's really your story.
Right.
Similar to being a new driver.
Right.
When you first get your driver's license, insurance is high. If you drive long enough and you don't get into a lot of car accidents, your insurance comes down.
Same idea.
But it's never going to be zero. And I'm sure the same thing is in the construction world. So the next question I have, which was on your list, which kills my company, is we help contractors update their insurance annually.
Yep.
So they come to us and we go through the different departments, Department of Transportation, the building department, and we tell them, look, you're missing your liability, you're missing your street obstruction bond, you're missing your general liability, workman's comp, whatever they're missing. And we go in and we tell them this is what's missing. And they say, okay, great. We're going to give you everything. Can you submit it for us? And we do.
Right.
And they give it to us the day before. And not only do they give it to us the day before, but we tell them in an email that it takes 2 to 4 weeks for the building department, because imagine that they got hundreds of thousands of policies coming in, and there's probably several clerks that do it. I don't know because it's back office. We don't see it. And they call here every day going, well, it's not updated yet. And we say to them, look, you gave it to us a day before. We told you it's so take me through that process, because it's not like it's a one-off, Matt. I'm being honest with you. It is constant. I could be working for the largest contractor who does $1 billion in construction, and I could be working with a guy who is in downtown Brooklyn who does $2 million a year. But for some reason, I don't know, and I'm going to put it out there. I'm going to put myself. Are they still trying to negotiate? Why do they wait for the last minute? This makes no sense. Why are they putting so much pressure on me and my firm when you could have gotten this a month ago? Right. So if you could try to take us through that a little bit, I would really, I'm really looking forward to that answer.
100%. And then that's a super common question. And the way it's posed to me is, why does the renewal always come down to the last minute? So we're not talking about even changing carriers, but so
staying within. So I want to walk the viewers through it.
Right.
I already have insurance. BNC's my broker. I call up Matt and say, Matt, get me a quote. I want to just renew my insurance.
Right.
We put everything in. You get a package. You do whatever the forms are and whatever package is needed to put it out to the same carrier. We're not going somewhere else. We're going to go back to the same insurance people and say, look, Sisto's insurance expires at the end of April.
Yep.
You put it in when?
3 to 4 months ahead of time.
Wow.
Yeah. So 3 to 4 months ahead of time, we start the process. We gather the loss runs. So there's really 2 different marketplaces. There's the direct marketplace, which is kind of the household name carriers that, you hear, the Hartfords, the Liberties, the Nationwide, Travelers. And then there's And those are typically easier to deal with. A lot of times we can get those well ahead of time. As long as we have the information up front, we have the loss runs, we have the updated experience modification. A lot of times we can do that very quickly.
So if a contractor stays in the 5 boroughs, he pretty much hasn't ventured out, or she hasn't ventured out into another workplace, and her volume is pretty much the same, and he or she had very minimal losses, God willing, pretty clean, and you're going back to the bigger.
If it's a direct market, that's
a pretty straightforward.
Now, most contractors in New York City are not in the direct market because there's only a few carriers that stuck around. And we'll talk about the reasons why later.
We're going to go to the scaffold law later.
Exactly. The other marketplace is the wholesale market, or the excess and surplus marketplace.
Gotcha.
So basically, as what they call as a retail broker, we have to go to a wholesale broker, who then goes to a host of different underwriters.
Oh, got you. So there's an additional step.
There's an additional step.
Right.
There's an additional person who's working probably with several
Hundreds,
different,
right.
not hundreds. There's still not that, because it's New York construction
because
and
of the
labor law. There's still not
as many.
It's not as many, but it could be as many as a dozen. It depends on what the trade is, depending.
So
what
on the
type of work
so on the
they're doing.
direct market, they go from B and C. You go direct to them.
Yes.
If they're on the wholesale market, you go to the wholesaler, who then goes out.
The wholesaler, for the most part, the wholesaler owns that relationship with the underwriter.
Right, you can't go direct to them.
No, can't go to direct.
Gotcha.
Wholesaler gets
So that explains
gets,
it.
a piece of it.
So when
We
you're
get
in
a
the
piece.
wholesale side, that changes the dynamics drastically.
Yes.
Wow.
Exactly. So the examples that you've given of the day before, there's really shouldn't be any reason that it's the day before if it's the same direct carrier. But when it's in the wholesale marketplace, it often
Comes right down to the
I just
end.
had one recently, a general contractor, and it came down to the last minute, and we started the process 90 days ahead of time, and it still came down to the last day, and I'm sure the expediter was going nuts saying, why do they keep doing this to me?
Right. We do. We do. But you touched upon something that is a constant conversation. And I've heard nightmares about this.
Yep.
I've heard, so in general, to the layman,
Yep.
tell us what the scaffold law really is.
So the scaffold law, so what Sisto is referring to is Labor Law 240, 241. And what it really comes down to is a term called absolute liability or strict liability.
Correct.
As opposed to comparative negligence. So take the example of I'm a general contractor. I hire you as an electrical contractor. You have one of your employees up on a ladder. He falls, so it has to be a gravity-related injury.
Right.
Meaning,
That's why it's scaffold, right?
Right. Yeah. So it doesn't. I mean, it could literally be the
Be
first
on
step on
anything.
a ladder.
Right.
But it could be something falling from a higher height. So either one. You could be in a trench and something falls on
Sure.
you. That could also be scaffold law, Labor Law 240. In every other state, that same scenario would be comparative negligence. They would look at
What happened?
and they would look at, well, did this guy just come back from lunch and he had a six-pack?
Right.
Did he, was he
Right. Where
intoxicated?
here,
Was
as
he
long as
high?
you fell off a ladder,
Doesn't matter.
doesn't matter.
Yes.
Because I heard a story about a guy who was working in a building. He had his ladders chained
Yep. Doesn't matter.
to a column. Someone went,
Yep.
forgot the ladder, took a bolt cutter, cut his lock,
Yep.
took his ladder, climbed up, fell off,
Yep.
and sued the company.
Yep.
And you're going to say, well, how did he know whose ladder was? Well, if you walk on construction sites,
Yep.
their name was on the side of the ladder, so no one would steal their ladder.
Right.
And he went to court, and when he got to court, he proved that the gentleman never asked for the ladder, that he cut the lock, because the minute that the ladders went missing, they called the police and they filed a report.
Yeah.
And he went to the general contractor and said, look, somebody stole my ladders. And then lo and behold, a couple of days later, a report came out at the job site that someone got hurt, and they made its way all the way back to his ladder. And he told me that loss went on to his record.
Yeah.
And he said, and the judge said, I'm sorry, but the law says that if it's your ladder, he said, you shouldn't have left. His comment was, but he said, look, I had it locked and
up.
chained.
Yep.
He said, it doesn't matter.
It doesn't
was your
matter.
ladder.
It doesn't
So
matter.
it was very harsh to me. So I was glad when we wanted to talk, because for me, to be honest with you, I can't put that in some kind of common sense language that I can understand, because to me, my dad used to lend his ladder to anybody on a job site.
Right.
My father would lend his drill to anybody on a job site. That's just the way it was.
Yep.
But it seems now that even on the job site, you have to be worried about and I can only imagine how, for you to have absolute liability on job sites with something like that, how much that has escalated insurance.
Well, and what it's also done is created a cottage industry of personal injury attorneys that focus
strictly
and really
on that.
target the workers, so that the workers know that, if I get hurt, I got to say that I fell. It's like,
but
like
you
that's some
see
of the
it. But
common
you're
words.
right. Social media.
Yeah.
You drive on the highway, you see, I'm like, how do all these billboards, how do they pay for all these billboards? And you see it, like I said, social media, on the highway, just everywhere. Commercials on TV. It just doesn't stop.
These type of claims can easily get into seven figures. That's why it's created a real industry, because there's real money there.
Right. And to be honest, if you're on a ladder and you fell because of negligence, I get it. Yep. But if you fell because you're not paying attention, or you went to lunch and you had a six-pack, or whatever the situation is, there's people that get hurt on job sites all the time, and it's very, very unfortunate. Yeah. And I'm a huge proponent of site safety. Yeah. Huge proponent. If you're going to make a lot of money in the construction world, and developers are going to make a lot of money, your jobs should be safe. Period. I was on a job site the other day with a friend of mine, personal friend. I never go to the job site without my hard hat and my construction boots on. Right. Period. I'm not on job sites ever, but I have them in my car. And sure enough, while we were there, don't you think OSHA showed up? Yeah. And they were happy with his site. That's the way every site should be. Yep. So you got to spend the money to protect the workers.
Right. But I mean, the insurance cost because of this, is literally, especially for contractors working at any height. It doesn't have to be significant.
Right. So anybody who does facades, but even a guy like just doing sprinkler and plumbing,
I mean,
mechanical.
It's a contractor doing facade work in Illinois compared to here, it's a tremendous difference.
Like double?
No, way more than double.
Really?
Yeah, we're talking 500+%.
Wow. And how about like the outer boroughs of New York City, like in Connecticut or in Long Island?
It's a New York state law.
Oh, it's a state law, so it doesn't matter. They could be in Buffalo or they could be here.
The insurance premiums are less outside of the five boroughs just because the five boroughs tend to be more litigious.
Right.
But it is a New York state law.
So it's a New York state law.
And now what? Connecticut, New Jersey, they don't have to worry about it at all. And when you tell one of, we're based in Westchester, so we work with people in Connecticut, New Jersey. And when I have this conversation with them, they look at me like I have 10 heads because it doesn't even make sense.
Well, I'm sure that if they're Westchester contractors and for me and you, Fairfield County in Connecticut, they must be saying, why would I want to go to New York?
Yes, exactly.
So that brings us to what I spoke to Andrew on our previous episode about construction escalating costs, and we didn't get into insurance. Because we knew that Matt was coming in, and Andrew as well. Yep. Is that we didn't really get into that, but here we are. Yeah. Here we are. So I'm a contractor, and like anything else, I'm sure that it has to do with claims and losses and things like that. But on average, without any major claims, what does the insurance market look like going forward? Andrew was saying that 5-6%, he thinks it's flattened out a little bit because of the demand. Yeah. And in insurance, I'm sure that if the demand goes down, I'm thinking that the rates may go up because they have less of a pool of money to pay out the claim. So take us through that a little bit.
You got to keep in mind there's the example you said, a contractor here in Brooklyn doing $2 million in sales. Well, maybe their insurance cost is $100,000, but one of those labor law claims can be $1 million.
Correct.
So the only thing the insurance underwriters know for a fact is that they're not charging enough, because one claim can completely wipe it out, and these claims are pretty common.
Well, especially now where if you just fall off, anything gravity related, if it's one step or 30 steps, it doesn't matter.
Right. So I would say when I started in the industry in 2011, a general contractor that had good loss history, maybe doing, let's say like 20 to 50 million in sales.
Small size firm. That's a good size firm.
I would say their insurance cost as a percentage of their sales was probably 2%.
Not anymore.
No, not anymore. Now it's more like that same contractor now, probably 5.
Wow, so it doubled.
5, yeah.
So in 10 years,
definitely
it
more.
doubled.
Yeah, definitely more than doubled.
And
in 10 years.
and if they have a bad track record, it's almost impossible.
Correct. If you have a bad track record and you're one of the trade contractors, a concrete superstructure contractor, that can escalate very quickly to 18%, 20%, and then 20%. How do you operate?
We talked about this briefly, and I'm glad you brought that up, because I often wondered if you're a general contractor that only has laborers, right, which is a lot of them, right? They just have guys that are, cleaning up every night, making sure the place is safe, all of that. But they really aren't doing masonry. They're not doing any of the trades. They're just the GC, and they sub it all out. Those subs are the ones that we don't really work with, but we hear all the chirping that, well, that guy's not around anymore. I don't use that sub. I don't use that plumber anymore. The older generation plumbers, this is a big part of it. Those older generation plumbers that are in, my age group, 58 to 65, that area, they've all retired.
Yep.
And one of the reasons that they said was after COVID, the volume of work that they had didn't maintain it, but the insurance got so expensive because of, especially with plumbing, a water valve is left open. It's negligent. The kid never shut it off, right? And the place floods, right? Or
all the apartments underneath.
Right. It's millions. Yeah. Millions. Then you get it was a bad fitting. It was a hot water heater that just came from the manufacturer that had a defect. Well, even though it may go all the way down the line to the hot water heater who produced it, who ends up paying the bill, the claims just went through, and it takes years to resolve it. So at the end of the day, I heard that the majority of the insurance problems are with the subs more than the GCs.
Yes, because it's called risk transfer, right? So risk transfer, if I'm a GC, I'm hiring you as a subcontractor, I want to, 2 things. Have you sign a subcontractor agreement with a hold harmless.
Right.
And also I want to make sure that you have the right insurance.
Correct.
Because that could be the best contract in the world, best hold harmless in the world, but if you got crap insurance that has a labor law 240 exclusion, then I'm going to try and pass the claim down to you.
Right. Now
it's going to come back up to me.
Right.
So the guys that are doing it right, the subs that are, and there's a lot of great subs that are doing it right. But they're paying for it. They're paying big money.
But again, so and I also think that part of that is, not to go off on a tangent, but I think that there is also the piece that's missed in this, is that I know a particular developer that he builds great buildings. But I know a lot of subs that can't work for him because of insurance. Right. And he said, and his position is, I will pay more, but you will have the right insurance. Right. I'm not gonna compare X per square foot from this sub versus that sub. This person doesn't carry the right insurance. This person does. Yeah, there's a premium to that. But if I were to buy his insurance, I'd probably be paying the same amount as him. Right. So I might as well use the right sub.
100%.
So I think that a lot of this gets misconstrued, that insurance went up. Yeah, I'm sure it's gone up. My personal insurance goes up. Chubb charges me more on my house, right? Chubb charges you more on your house, right? So at the end of the day, everyone's business has inflation. Every business has what it has. But what I was surprised at was the number of subcontractors that were complaining more than the general contractors. And your point proves that to me now, that if they're not carrying the right insurance and they need to work for this particular GC, they're not going to get the jobs because they don't have the right insurance in place. So that's part of hedging your risk as the general contractor as well as the developer, right? So if you work for a university, their insurance, you're really mandated by your subs, because you're not going to let those other subs onto your site if they don't carry the right insurance.
The first thing we ask when I'm speaking with a new subcontractor, or a GC for that matter, is I need to see your upstream insurance requirements, because that's, I mean, it used to be that we would be advising you need a 5 million umbrella, you need this, you need that. Now it's no, you know what you need. It's in the contract. Let me see that contract.
Correct. If you work for this company, so we work for a lot of companies that ask us for our insurance. Now, in our industry, there's a lot of people that don't carry the same kind of insurance. But if we work for these clients, they tell us up front, you can't work with us unless you have X, Y, and Z. Well, the first thing we do, same thing as you, is we take our policy and I mean, we take our requirements for our contracts and we give it to our broker. And when the contract comes back and says you need to carry this, we say, look, this is what we got. This is what we got. And a lot of the times they will come back to us and say, okay, we'll pay for it. And we go, well, you could pay for it, but we can't get it because what you want is a different kind of insurance for a different sector of the business. But your contract language is specific for all subcontractors. And that's not us. You know, we're this. So it's the insurance, even in the expediting world, even in the code consulting world, it comes into play. I'm on the contract side. I do business development here at Design, is that we read every one of those, and we don't sign our contracts if we don't feel we could meet what they want. You know, because if you sign it, now you own it.
And you're in breach of contract, right away.
Right away, before you even start the job. So tell me a little bit about, you know, I hate to use this, but we did this with Andrew last time, is, you know, forecasting a little bit of the future. You know, where do you see the construction insurance world going in 2023? You know, you've been in it a long time. 12 years is a long time to be in an industry like you're in, and especially dealing with contractors not only in New York City but Long Island, Westchester, Fairfield County, probably New Jersey as well. You know, where do you see the insurance world, and what are the big companies saying as we go forward?
What I'm seeing, what we're seeing, and we kind of, the principal of my firm said this maybe 10 years ago. He said, what's going to happen specifically for general contractors is that they're going to be mandated to have a subcontractor vetting process to make sure that their subs. So if I'm a GC that works with 80 or 100 subcontractors, right now we're starting to see this, and we're going to start seeing more of it. Is that in order to get that policy, you need to also, in conjunction with that purchasing that
review
new policy,
theirs,
review all, or hire someone to review all 80 or 100 subcontractors. So we have a program called SubShield that does that, but there's also third-party companies that will do that for you.
Wow!
And
so if a GC,
saying,
so if a GC has 80 subs, his iron worker, his miscellaneous metal, his carpenter, his painter, everybody who works for that team, you think that in the future the GC is going to have to show the insurance company that he's using. Because
it's already happening.
And you think that's because that'll be able to cut down the risk.
Right.
Because they'll be using professional firms that have a track record and say, look, why are you hiring this sub? He or she has 30 claims last year. Something's not right there. We're not going to, you shouldn't piggyback that into your.
And not every GC is going to be willing or even able administratively to even if you have a third party do it, there still needs to be some folks administratively.
You can't just pass the buck.
Do that. So maybe the smaller GCs that aren't able to do that, what's going to happen, and what we're already starting to see happening, is that the insurance carriers are putting what we call in the industry a hammer clause. But what it is a subcontractor warranty. So meaning when a claim comes to the GC that arises out of a underinsured subcontractor, so when it comes back when it comes back to the GC, there's not going to be any coverage. Basically the carrier is saying you hired someone that didn't have the right coverage.
Gotcha.
So
well, that's exactly what just the way you explained it. And I can understand how that can be that could be the vision of the future, that your subs are part of your extension of your office. If they're not fully insured or properly insured, that well, you know what? We're not going to take that risk anymore, meaning the insurance company, you're going to take that risk.
There's a lot more skin in the game for a GC than there was even 10 years ago.
Well, Matt, this has been incredible. I've always wanted to have a person of your understanding of our industry. As a code consultant, as an expediter, we ask these questions all the time. We never get 5 minutes to talk to someone who has your experience to tell us about what really happens behind the scenes. And you've answered the $1 million question to me, which is, why do we always get it at the last minute? And now I can see how complicated it is. It's not just writing a check. Just write the check and they'll send us, when you want to renew your car insurance, you give them your credit card, and 5 minutes later, they give you the insurance. You go buy a new car. It takes 2 minutes, right? Here, we're in a different ball game.
A lot more complicated than New York construction.
Absolutely. Well, Matt, it was a pleasure.
Yeah, pleasure.
Thank you for making time for us,
thank you.
And we appreciate it.
All right.